Driven past a construction site, seen some massive piece of equipment, and just wondered, how does that thing actually show up in a company's financial system? Well, today, we're going on that exact journey. We're going to see how a physical object gets turned into clean, simple financial data. Let's dig in. So it all starts with a really tangible question, right? You've got this giant 20-ton machine, a brand name asset for the business. And somehow, all of that steel and power has to become, well, just one line, a single number sitting on the company's official balance sheet. So how in the world does that happen? That is exactly what we are going to break down. Okay, to make this feel real, let's start at the very beginning. We're talking about the physical asset itself and, of course, the person whose job it is to get it on the books. So meet Kevin. His company just bought this brand new excavator. Now, he's got a really important job ahead of him. He has to record this massive physical asset in the company's financial system. And it's not just about, saying we own it. It's about accounting for it perfectly, right from day one. So what's the very first thing Kevin has to do? He's got to bridge that gap between the physical world and the digital one. It's time to create the asset's first digital footprint. And it all kicks off with one super important piece of data, the capitalization date. Think of this as the asset's official birthday. It's the moment the excavator joins the company's inventory. And, this is key, it's the starting line for its entire financial life, including when it starts to lose value through depreciation. Now, the cool part is how the system helps figure this out. If Kevin knows the exact date the excavator started working, great, he can just pop it in manually. But if he doesn't, the system has this really clever rule. It looks at the invoice date and the date the transaction was entered, and it just proposes the earlier of the two. That way, you get the asset on the books as soon as possible, which is absolutely critical for accurate financials. All right, so our asset has its digital birth date. What's next? Well, now we have to connect this detailed information to the company's main financial records, what's known as the general ledger. And to get this, you got to think of it like two different worlds that need to talk to each other. On one side, you have asset accounting. It's totally obsessed with the details of our excavator, when we bought it, how much it's worth, how it depreciates. But on the other side, you have the general ledger. It only cares about the big picture, the financial summary. The whole trick is getting them to speak the same language. And the magic moment happens right when Kevin posts the invoice for the excavator. The system is built so that this one simple action creates what's called an integrated transaction. It's this really elegant, efficient process that updates both the detailed asset record and the high-level general ledger at the exact same time. And this right here, this is basically the language that transaction speaks. In accounting, everything has to balance. So the company's technical assets account goes up. That's a debit. And at the same time, the amount it owes to the vendor also goes up. That's a credit. This perfectly balanced entry is the move that officially puts the excavator's value onto the company's books. Okay, so we've created the digital record, we've posted the financial transaction. Now for the big reveal. Let's see where this thing officially lands. Let's just put a number on it. Say the excavator cost $150,000. All that work, the machine, the dates, the accounting entries, it all comes down to this one number. And there it is, the aha moment. Right there on the company's official balance sheet, under the assets section, you see that line for technical assets in machines. And its value has just jumped by 150 grand. Our 20-ton excavator has officially been transformed into a single number. Pretty cool, right? But wait, that's just a snapshot, isn't it? That's just one moment in time. What if we want to see more? What if we want to understand the asset's entire story? Well, as you can imagine, that's exactly what happens next. Kevin's manager comes to him and says, "Hey, this is great, but I don't just want to know the value today. I need a report that tells me the story of all of our assets over the whole year." And this is where a really powerful tool called the Asset History Sheet comes into play. It's designed to answer exactly those kinds of big business questions. What did we start with? What new stuff did we buy? Did we get rid of anything? And what's the bottom line at the end of the year? And here's a peek at what that looks like. You can see it's got this super clear flow, tracking the beginning value, adding new acquisitions, hey, there's our excavator, subtracting anything that was retired, and giving you that clear ending balance. Our excavator isn't just a static number anymore. It's now part of a dynamic, living financial story. And with that, the journey is pretty much complete. We've literally followed this thing from a physical machine sitting in the dirt all the way to a fully integrated, fully tracked financial record that tells its value story over an entire year. So it really turns out that every single number on a balance sheet, every line in a report, it has a story behind it. There's a journey from the real world into the language of finance, which kind of leaves us with one final thought to chew on.
All right, let's dive in.